Most home buyers don't blow their budget in the cafe, they blow it in the contract. 2 invisible mistakes can stretch you thin, and one of them can even cost you tens of thousands of dollars during the life of your loan. Welcome to Money Shape Up. I'm Dr. Linda Hamilton, author of Pay It in 5. We paid our home loan off in 5 years, and today I'm taking you through part 1 of our 5-part series on 16 costly mistakes by home buyers. Most people who buy property think they're being careful when they buy property, but there's 16 invisible mistakes that could be silently sabotaging your finances. In part 1 today, we'll be tackling the biggest trap, financial overstretch. We'll break down 2 of our 16 mistakes that are silent budget killers. If you want a home that you can actually enjoy, stick with me and I'll show you how you can stress test the numbers, set a smart buffer, and avoid the look perfect now, pay later trap. Mistake number 1, borrowing the maximum. Many first home buyers stretch themselves to the top of their borrowing capacity. They cap out on their home loan because they want the best bang for their buck. This is often based on emotions because you want to buy the best property that you can with the money that you have. But this is not a financial strategy. When you max out your budget and you max out your home loan, there's very little room for change. What if interest rates rise? What if you have an unexpected expense like a leaking roof? Or what if your personal situation changes? Maxing out your home loan leaves you little room if things change. It can lead to financial stress and make it harder for you to build wealth if you're looking to make extra repayments or to save for your next property. There are 2 psychological biases at play here: optimism bias and present bias. Optimism bias is the tendency to assume that the best scenario will happen. For example, over the next 30 years of our home loan, we will expect that our income will keep increasing, our interest rates will stay manageable, and that we won't have any financial hardships over that 30-year period. But the truth is, life happens. It's important that you do set yourself up so you can withstand any financial hardships that might come along. Present bias is getting swept up in what feels good now without thinking about the long-term consequences. It's why people get caught up wanting things like the beautiful kitchen, the city views, or to be living in the trending suburb, even if it pushes them to the edge of their budget. But those short-term wins often come with long-term costs. Borrowing the most you can borrow leaves you little room for life to happen. It also limits your ability to make extra repayments and to start building wealth or building your own equity. It can lead you to getting stuck fast. Most people who borrow the maximum they could possibly borrow say things like, well, it doesn't matter because the property will grow in value anyway. If you want to know why this myth doesn't actually stick, watch this video on buying the most expensive house you could possibly afford. So what's the smarter move? Avoid taking out the biggest home loan that you could possibly take out, and instead buy something where you can make extra repayments so that you can build up equity and you can move on to your next property sooner. If you haven't got a home loan yet, watch our masterclass on how you can buy smarter before you get a home loan. And if you're not sure if your home loan is setting you up or stretching you too thin, then test it out on our free home loan calculator. There's a link in the description. Because financial freedom doesn't start when you pay off your home loan. It starts when you structure it right from the start. Mistake number 2, not having a financial buffer. Is your deposit just enough to get the property? If it is, that just enough could be costing you thousands, even before you get the keys. When you buy property, there are upfront costs that you might not be aware of, and it's important to give yourself a buffer so that you can be prepared for those costs when they happen. If you want to know about the hidden costs when buying, watch this video. The same 2 psychological biases are at play here as well, the optimism bias and the present bias. People who don't give themselves a financial buffer think that the worst won't happen to them, but this mindset ignores the very real financial risks when buying property. For example, in this video, I talk about the hidden surprise that completely caught us off guard on our first property. We were lucky we had a buffer so we could withstand it, but if you fail to give yourself a proper buffer, then you could be wearing extra costs that you're not expecting. This creates a false sense of security, and we just assume that everything's going to go to plan. You might not even realize that when you're buying property, things don't always work out. It's not usually that simple. When you don't give yourself a financial buffer, even small unexpected costs like a contract delay or strata fees or a bank valuation shortfall, it could cost you in the long run, and it could cost you thousands. For example, if you can't meet the extra fees, then you might need to end up taking out lender's mortgage insurance, which can cost you tens of thousands of dollars. Give yourself a decent buffer before you buy property, and make sure you know the hidden costs that could come up when you buy property. It might mean you end up buying a less expensive property, or you save for a bit longer before buying. Either way, give yourself a decent buffer so you're buying from a position of strength. Don't let rush decisions or a missing buffer cost you thousands. Buying smarter starts with planning smarter. And because you've made it to the end, I have an exclusive offer for you. I launched Money Shape Up in 2025, and every month in 2025, I'm giving away a free copy of my book, Paid in 5. If you'd like to win a copy, click the link in the description.